Morse code signal. That was the beginning of our program, and that program is Gilbert Talks Taxes, right here on WCAB. Now, it's 590 AM and FM. I'm supposed to say that first, not at the end. FM 100.9. I will get that. I've been enjoying it. I've been listening to it on the FM. It sounds great. Sounds great. It was a good thing Jim did there. Well, good morning, everyone. I am back. Gilbert Talks Taxes after our little break there. My engineer this morning, Todd. Good morning, Todd. And my assistant, Canyon, is here helping me. I was not going to start the program until a little later in the season, maybe even into January, as we were planning when to do this. But I had to start it early. Why? The new tax law. And I'm going to go out on a limb, and it's not. This is a pretty strong limb I'm going out on. So I'm going out on a limb, and I'm going to say this is the most significant tax change since the Ronald Reagan tax bill of 1986. And how can I, that's right, Todd, it is a big statement. And how can I make that big statement? Because my name's Gilbert Carmona. I'm an enrolled agent. An enrolled agent is a person enrolled with the Internal Revenue Service, the IRS, to represent taxpayers, just like a tax attorney or a CPA would and could. I prepare tax returns. I do tax planning. I'm all about taxes. And I do this program to try to get news out to the people here in the community and all my listeners. And over the years now, I've got quite a following. It's really, I didn't think at the beginning people would be that interested in taxes and tax law, but they really enjoy it. People want to be prepared, and they tell me I've given them a lot of good advice and given them some good heads up on coming things. So we have got a coming thing here. Now, if you need me, I have two offices. One here in Rutherfordton, 113 Whitesides Road, right up the street from the station. My telephone number is 828-289-9300. You can call me, ask me any question you have. I'm willing to help people. Initial consultations are free if you have a tax matter, if you just need some advice. At some point, though, it does become an engagement where we take it to a point. But if you just have a question, you can also send me an email at gilbert@gilbertcarmona.com. My email address. Send me a question, and if I can answer it, a lot of these I can answer right away, just because I do this all the time. Some I might have to research a little bit. I have another office in Tryon at the beautiful Art Deco building, 226 South Trade Street, just past the historic downtown there. The Art Deco building, I'm there at that office, typically by appointment, though. It's staffed by Christy and Ann. You can stop by there. Again, our main number, 828-289-9300. Now, if you have any questions, you can call here. I don't have the capability to take your question live on the air, but my able engineer here, Todd, does a good job of writing the question down, or Karen, or whoever's out there answering the phone. You can call us at 828-2. Hey, help me with this, Todd. It's been 6 months. 287-3356. See, when I need you guys, I have Jim in my phone. I just put Jim. I just press the Jim button, and I get the station. We are live streaming at www.wcab59.com, and it looks great. I look very nice. Fabulous. I do look fabulous. Yeah, my hair is always fabulous. So you can see us live there. Those of you Northland Cable Channel 5 subscribers, a lot of you out in Polk County are not listening to me on that anymore. We've terminated our agreement with them, I understand. So now they've got to listen to me live.
Yeah, you have to.
Live. Well, now that we have the 100.9, I mean, what FM, they should be able to get us all the way over to Hendersonville. I mean, there should be no problem there. The other side of the mountain. So got all that out of the way, right? Okay, yeah, oh yeah, good. Got all that out of the way. So let's get down to it. We have, actually, my wife wanted me to start talking about security again, because as if we can't get enough of this topic, the scams, because she's the one that answers a lot of the phone calls. So she's been getting the phone calls. A lot of the scams, you get the phone call, the IRS is going to send the police, they're going to arrest you if you don't pay money right now. Okay. It's a scam. The IRS does not do that. We know they don't do that. But people still, it's like they say, I know, I've heard you say it. You tell me when I'm in your office. I hear you say it on the radio. I see it on the IRS website. But you get that phone call, and it says there is a warrant for your arrest for past due taxes. And like the one man said, he said, I just had to pick up the phone and call you. Now, what do you do when you get that phone call? If you remember, there was really a lot of that going on about 2 years ago. And then Interpol, the Internal Revenue, and I don't know who, FBI, CIA, really broke a ring in India, of all places, right? In India, there was actually a gigantic server farm. I think there were 75 or 80 people arrested involved in this scam. Hundreds of millions of dollars had been funneled to it. There was another one in Nigeria, but the big one was the one in India. Well, they stopped that, got them offline, took their equipment down, arrested them, but it took only about 6 months and there was something else back up and running. So they moved to another country. So it is out there, it's happening. The victims, though, and the people that I'm most concerned with and warn the most, is senior citizens. Please, if you're a caretaker or you're involved in the care, you have a parent or somebody, be aware. They're the ones that panic, and I know it because a lot of them call me. And they're worried that their Social Security is going to be garnished, their pension is going to be garnished, and they don't understand why this is happening to them. And a lot of them will pay because it's not like a really large amount of money. It's not like, $10 or $20,000. They know what they're doing. They're very sophisticated. They make it a small amount of money so that most people will just pay it. You owe us $1,500 right now. Well, most people number one, that believe the story that this is happening to them will go ahead and pay the money, and then they'll figure we'll sort it out later. And then what happens is you've given them now your bank information or whatever, credit card, and they're not going to take $1,500. They're going to clean the account out. So that's typically what they do. They'll hit it several times for large amounts of money, or they'll hit it several days in a row, and before people even know what happened, their money's gone. And you're not getting it back. Okay, so it's not coming back, especially on an ACH or a wire. It's just not, it's gone, especially if it goes overseas. So this is still happening. It's still a threat. Why does it involve taxes? Well, because they're using the IRS, and they're using that fear of the IRS, because they know most people are afraid of the IRS. There's employers, a variation of this is employers will get a request from the IRS for W-2 information. Now, what they're looking for there is not money. What they're looking for there is information. They want your employee list with Social Security's date of births, and what do most employers have in that whole database? The children's Social Securities and date of birth, the dependents, everybody you put on that W-4 form that you filled out when you got a job. So employers, please watch out for that. It is a scam. The IRS will never call you asking you for W-4, W-2 information. They have it. They don't need it. If there's a problem, this is for employers, really for anybody. If there's a problem and the IRS needs you, they will write you a letter. Now, when you get this phone call, let's say you get this phone call, what do? I just hang up. But let's say you believe it or you think it might be. Because incidentally, I can't remember the exact number, but I think it's as high as 20-something% of all Americans have some kind of issue with some taxes. It's I want to say it was like 25%. Something. The government owes you some money, or you owe them some money from way back when, or you might owe them some money, or you did owe them some money, you thought you paid it, you don't know. So that's in the back of your mind when you get this phone call. So they know they have a 1 in 4 chance of hooking a fish, as my uncle used to say. And those are, you're right, Todd, those are very big odds, 1 in 4. It's not 1 in 10 or 1 in 20 or 1 in 100. Like most of your telemarketers, if they can get 1 in 100 phone calls to take 3 minutes to talk to them, they consider that doing really good in that business. I've got some clients in that business. They tell me the numbers, it's 1,000 phone calls to get 1 sale in the telemarketing and fundraising business. These guys have a 1 in 4 chance of getting $1,500 from somebody. So, and to them over there, it is a business model. It's not, this is a business. They run it like a business. They show up to work 9 to 5 and do this. This isn't just some guys sitting around trying to trying to make an extra buck. This is organized crime at its finest. Christy sending me some information hot off the IRS website right here. Sending me some information. Now, you get it in real time here, Todd. This is the real thing. She says also, this is again to the employers, and not just employers, HR people. You're an HR person. They're asking for the W-2s, like last year's W-2s. Oh, we didn't get them. We didn't get last year's W-2s. We think there's a problem. It's very convincing. These emails are they look very, very official. We think there's a problem. Can you send us all the W-2s for the last 3 years? Or we're doing an audit, whatever. And a lot of people don't stop to question this. So the IRS, let me just go ahead and talk about this till the break, and then that'll be that. I promise I won't talk about it till we come back. So what the IRS last week had a whole cybersecurity week where the whole week was set aside to educating us, the practitioner community, those of us that actually deal with the taxpayers, educating us, educating vendors, and educating the public about cybersecurity. So it's not just the phone call. If you get a phone call, let me finish the one thought. What do? Hang up and call the IRS back. If the person seems pretty legit, because some of them do sound pretty good. Now, sometimes when you get that foreign accent that they ain't from around here and you can barely understand them, just hang up. Don't even bother. The IRS would never have a person like that call you anyway. So just that, is a scam. But let's say the person sounds pretty convincing. You do owe the IRS some money, but you have some doubt. Now, if they're asking you to pay with a credit card over the phone, the IRS will never do that. Let's just say you have some doubt. You got a question. What if, say, sir, ma'am, whoever, I'm sorry, but I'm going to go ahead and call back and confirm this information. If the person calling you is a real IRS agent, they will say, because this is what they've been trained to say, and this is how they're supposed to handle it, they will go, thank you, Mr. Taxpayer. Go ahead and do that. Okay? And that's what they'll say. Go ahead and do that. Now, if they give you a telephone number to call, please be careful and double check that number. If they say, oh, go ahead, let me give you this number. And it's some number. The IRS has very specific numbers. They're published on the internet. They're published on their website. You can get them. You can always call the IRS's main number. Or you can call your tax practitioner. And that's what I tell people to do. Please call your tax practitioner. Call me, call Christy. We'll help you. And we'll know exactly what to do. We'll know exactly where it is. And we'll know if it's legitimate or not because it's us you're dealing with. But so they had a lot of cybersecurity. So to move on, emails, the IRS will never send you an email asking for money through a link. They'll just never do that. The IRS, and what those emails are all about, and that was what the cybersecurity was all about, was they will have links in that email that you will click on, and those links have other things that are not good. You think you're clicking a link to make a payment, you're not. You're linking to something that will download information onto your computer used to steal information, to steal your information, to steal whatever. They'll put malicious software on your computer, and that computer will take over your computer. So don't click on any links, and always look at the return address. If the return address is suspicious at all, as an example, the IRS's all their emails are irs.gov. Their website's irs.gov, G-O-V. So if you get a Yahoo account, Hotmail, whatever, IRS agent at hotmail.com. Really? That's not very legitimate. I had a client fall for one, and the email address was so ridiculous. I said, look, I don't want to laugh, but I have to laugh. Since when would an IRS auditor have a Gmail account? So, stop. Just catch your breath and stop. Look at this and say, is this real? And again, if you don't know, get some help. So those of you, getting back to the senior citizens, those of you that are caretakers or responsible for elderly people, I know elderly people are very proactive on the internet. A lot of them, it's how they, talk to their families that live far away. They Skype, they do FaceTime, they use these apps. So believe it or not, I've seen some elderly people really know their way around a computer. They know how to use email, and they know just enough to make a lot of mistakes and get into a lot of stuff that they shouldn't. So train them, spend some time with them. Don't have them just respond. Tell them what's going on. Again, the IRS will never reach out to you. Anything problem you have, you will get a letter in the mail. You will know you have a problem. Now, before we take a break, the last thing I want to say is, in years past, I've made reference to the IRS wanting you. What happened is, let me give you the history. One guy had set up a website. It's not a website, actually. It's a page on Facebook. So it was like IRS, or it was like your IRS at whatever the Facebook page is. And people actually fell for it. People were actually clicking on there, going to links, making payments, doing things. And I would say the IRS does not use Facebook. You don't like the IRS on Facebook. I mean, nobody likes them, period, let alone liking them on Facebook. Well, now the IRS, and I don't agree with this. I really don't. I might get in trouble with them for saying this. I might be getting a letter next week. But they're engaging taxpayers now on Twitter, Facebook, and we just found out they have an Instagram account. Yeah, I know. Todd's shaking his head. So you're telling them don't trust them on social media, but now they're on social media. And a lot of us in the practitioner community feel that, and this may be the fox designing the hen house here, but we feel that the best way to get information out to people is through the practitioner community. We're the ones that are already engaged with the taxpayer. And then the taxpayers that file by themselves get the information through that software because they're using some software. But go directly. I just disagree with the whole social media thing. But I used to say they're not on social media. Well, yes, they are. Yes, they are. But again, they're not going to ask for money. They're not going to try to get you to make a payment. They're just getting information out there. And they feel it's a good platform for it. I don't know. We'll see what happens. I personally think it's just opening the door for more bad stuff to happen. Todd, let's go ahead and take a little break here. And I think I beat security into the ground enough. Coming back, I'm going to talk about the biggest tax law change since the tax reform of 1986. I want to tell you about a little-known Rutherford County gem, Integrity Marble and Granite, located at 287 Shiloh Road in Forest City. They are the premier stone fabrication company in the western North Carolina region. They specialize in granite, marble, and natural stone, offering complete design and installation. Their design center and Kohler showroom features vanities, decorative accessories, bathroom, and kitchen fixtures. You do not have to go to Charlotte or Asheville for this kind of quality. We have it right here in Forest City. Stop in their showroom and browse their beautiful displays, or you can call 828-247-8801 for a free quote. You can also go to their website, www.integritymarblegranite.com, and look at the pictures and see samples of their available materials. Now, mention you heard it on Gilbert Talks Taxes, and they will give you $100 off any sink purchase. That's Integrity Marble and Granite. As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous. This is Gilbert. If you owe the IRS past due taxes, don't call those toll-free national numbers. Local, affordable help is right here in Rutherford County. Stop garnishments, levies, and liens. Call Gilbert Carmona at 828-289-9300. All initial consultations are free. Call Gilbert, 828-289-9300. Good morning. We are back. This is Gilbert Talks Taxes right here. Help me, Todd. WCAB 590 AM and 100.9 FM. I'm going to get it. Was it before or after the numbers I'm supposed to say? It doesn't matter. It doesn't matter. As long as I get it in there. WCAB, Gilbert Talks Taxes. Thank you so much for tuning in. And those of you that were quite excited that I was back on the air, several people were. And Betty, special good morning to you. Thank you so much for listening. And so many of the people said, I heard the commercial on the radio. I heard you're going to be back on the air. And somebody texted me last week and said, I thought you were going to be on the air today. I said, no, it's next week. So, but I don't know how many people are listening today. I think everybody's sleeping in this morning, getting ready for the big blizzard of 18. You know, I was in Chicago 2 weeks ago for the blizzard up there. I landed that morning at O'Hare. It was 17 degrees. It had a blizzard overnight. I was there for 2 days on some business meetings, and I stayed downtown where it got to about 5 below zero. So so that was just, I think, a warm up for this. I got in there. They had ice so thick, even for Chicago. They were, and you haven't lived till you can't get into till you've been in a situation where you can't get into the place I was staying was at my client has a rental on the near west side there, Ravenswood, a beautiful neighborhood. I couldn't get in the door because it was frozen shut. Couldn't even get the key in the knob. It's they have special challenges up there. Fortunately for us, it's going to melt by Monday night. It'll be gone, maybe, hopefully. You don't think so? No, Todd's going, no. No. We're going to be dealing with this all next week. All next week? Really? I thought the temperature was going to get back up to 41 or something. Yeah, it's freezing every night. Freezing every night. Oh, 17 degrees. Well, that's what it was in Chicago, 17 degrees. 5 inches of ice on the road. Oh, yeah, because it came down and froze.
Plus on top of 10 to 16 inches here. So.
10 or 16 inches. They're saying 25 up in Nashville? So everybody's sleeping in. They're going to get up and have hot chocolate, and they're going to go, wasn't Gilbert on this morning? Go back and listen to it. WCAB right there. www.wcab59.com. Okay, well, now that I pointed to the monitor, for those of you that are looking at me, look at what I have in my hand, Todd. What do you see there?
Oh, that's a 1040.
That is the brand new 1040, 2018 1040. And
does that include our crumbs?
Does that include your what?
Our crumbs?
The crumbs that you're getting from Nancy.
Yeah.
Yes. Well, see, okay, thank you for bringing that up. This is why people ask me, Gilbert, and they really start every sentence with Gilbert. I don't know why, but Gilbert, is the tax bill good or bad? I say yes. That's my answer. Yes. Is it good? Yes. Is it bad? Yes. It just depends what you're doing, how you're doing it, what kind of business do you have, what your profession is, your tax bracket. Overall, I have found more good in it than bad. Overall, so far. And that's one of the reasons I wasn't going to start so early, because all summer we'd get good news. Because what happens is, okay, so they passed the law, and then the IRS has to decide how we're going to implement this law and how it's going to affect things. And you really don't know until you get in it and start. That's how this happens. So we thought a bunch of things early on. Turns out the IRS said, no, we're not doing that. Then they said, oh, yes, we are doing that. Then they said, no, we're not doing that. So, and even Congress is getting ready to meet here one more time, and we'll get some more guidance and some clear things there. And this is the really boring stuff that the media doesn't cover, because people want to hear, the bottom line, people want to hear, am I going to get a bigger refund? Am I going to owe more money? That's the bottom line. Am I saving money? Is it going to cost me money, or am I going to save money? Well, on our end, it's a little more complicated than that. We have an actual thing called law to deal with and make sure that I do everything right so that, before you actually get your refund. So that's the inner workings of it, and it's boring, tedious stuff that will never make the front page of CNN, okay? So that's been going on all summer. And we didn't have enough guidance to know and to start giving good tax advice. And people that were giving tax advice early on, I told, we had a meeting at the office, and I told my staff, I said, be careful. We don't know enough to start saying yes or no. And a politician can find a good thing and a bad thing in any of these tax laws because they are so complicated, and be telling you the truth, okay, or at least not be telling you a lie that is so big they'll get called out. They can make these blanket statements. The worst tax bill ever. Really? It's like an hour old. How do you know that? Remember, they were saying that the day after the thing got passed. It's going to cost Americans millions of dollars. I don't think so. But hey, what do I know? The thing's not even an hour old. So there's good things in here. There's bad things in here. The main thing I want to tell you, though, why I wanted to come on early, is people, please check your W-2 withholdings. Okay, I'm going to say that again. Those of you that work, get a paycheck, and have W-2 taxes. At the end of the year, you get that W-2. You have withholding. There could be some issues with that. You may not have, and I say that very carefully, you may not have withheld enough money. So while you're going to pay less taxes, your standard deduction is higher, your child tax credit is higher. You may not have withheld enough, and there may be an overall deficit, so your refund might not be as big. Or you may even owe a little money. This is the concern I have. I've identified that problem with some people. How did this happen? When the tax law got changed, they did not adjust their withholding correctly. Some over-adjusted, meaning they had less taken out, a lot less taken out based on those tax tables. And HR departments, I mean, God bless them, they have a lot going on, a lot more than just your taxes to worry about. You know, we're in an age of a compliance nightmare for human resources. If you work at a bigger company, a multi-state company, a multinational company, the human resources department has a lot going on. So they may not have, let me say that again slowly, they may not have advised you correctly. Okay, we saw that happen a couple of years back when North Carolina changed their tax rate. And it used to be that when you would fill out that W-2, you know, when you got a job, okay, you get a job and they give you that W-4, where you tell them you're withholding, married, single, head of household, advanced EIC, you tell them all that stuff. You fill that out. Well, there's one for the IRS and there's one for the state of North Carolina. And what did they always say? Oh, just put down for North Carolina whatever you put down for the IRS. And that used to be true more or less. Unless you had a special situation, you could do that. Well, with North Carolina's new laws, that happened 3 years ago, it changed that. So people that would normally have gotten back a $300 or $400 or $500 North Carolina refund were now owing North Carolina $300 or $400 or $500. And it wasn't just a few people, it was a lot of people. And it's not that it was a lot of money, it was just that it caught so many people off guard. Where they're, you know, okay, well, we always get a refund there, we always get a refund here. The question is how much. Now they're having to owe, and by April 15th, by the way, or there's a penalty and interest on top of that money. So the people that usually wait till March to do this, those people got blindsided. They had to come up with some money out of pocket pretty quick. But anyway, so that was that. So a lot of people didn't do this correctly, and I'm a little concerned. I'm just a little concerned. We're going to see this nationally. Several other tax preparing firms that I talk to, that I get information from and share information with, they're all saying the same thing. They're seeing it now in some of their tax planning. I've seen it a little. It's not going to be for the ones I've been working with, it's not that big a deal, but the potential is there. What do you do? I don't know. Just check. I don't know what to do. It's 3 weeks till the end of the year. Just be aware that this may happen. Now, what can you do? You can do this. Go to the IRS. Go to irs.gov, irs.gov. They actually have a tool where you can check your withholding and see if you've been withholding enough. Now, this tool is not going to ask you for your social security number or your date of birth or any proprietary information. This is just a tool that calculates numbers. It's not going to ask you for your name or your spouse's name, how many children you have, or I'm sorry, ask about dependents, but it's not going to ask you about their, names and social security numbers. That's anything other than irs.gov, you're at a wrong website. So you go in there, they have this interactive tool. It's a W-2 simulator, they're calling it. You can go on there, fill it out, engage in the tool, put the information in there, and it'll tell you more or less where you need to be and what you can expect. Play with it a little, get comfortable with it, and see. And then at least you'll be aware. At least you'll be somewhat ready, and you'll understand what the implications of what might happen is. So that's the big thing I'm concerned about. That's why I wanted to come back early, just to tell you that. Todd, check that out. Now, it's break time already. Where's time go? What do I do? What do I do? Well, once I start into this, I want to start into this. Let's go ahead and take a quick break. Let's go ahead and do that. And then I can come back and I can have uninterrupted time. This is Gilbert Talks Taxes on WCAB AM 590 FM 100.9. How's that?
This is Gilbert. I've made a career out of helping businesses. Something else that can help businesses is a good sign. Let me tell you about DS Signs and Graphics right here in Spindale. Whether it's outdoor signage, banners, printing, or promotional items, call Alex at 828-286-4900. And remember, a good sign is good business.
Hi there, this is Kimberly, and I'm here to tell you about Peterson's Auto Service and Detail Shop. As a woman, I'm often apprehensive about taking my car to a dirty service garage. But you can be assured that Peterson's, located at 478 Butler Road, Forest City, has an incredibly clean and safe environment where you get high-quality service at a great price. Peterson's was voted Rutherford County's best auto service 3 years in a row. So take your car to Peterson's for brakes, oil change, North Carolina inspection, tire rotation, headlight lens restoration, scratch removal, and meticulous auto detailing. That's Peterson's at 478 Butler Road, Forest City. You can call him for an appointment at 245-8889.
We are back right here, WCAB, AM 590, FM 100.9, Gilbert Talks Taxes. And why do I talk taxes? Because I'm an enrolled agent. I'm a tax expert. If you need me, you can give me my telephone number, 828-289-9300. Call my office. You can call me here at the station if you've got any questions or any comments or anything, 828-287-3356. How's that? Were you listening? Was that correct? Thank you. Well, it's been 6 months. Somebody here in the break just told me they got, getting back to scam for 30 seconds, they're saying your social security number has been made inactive. Really? Your social security number has been made inactive. You get it at birth. Yeah, Karen. You get it at birth, okay? And it's with you the rest of your life. And that's why this is so important. All this with the scams is this is taking your personal information. And remember, my first year, I said the biggest challenge the IRS is going to have is how to safeguard people's security, their date of birth, so that it was going to be a bigger challenge than any other, than money, than laws, than administering tax code. Forget all that. Safeguarding people's information was going to be their biggest task, and I didn't think they were up to it. Let me say it that way, up to the task. Not that they can't or they're not capable, it's just they weren't ready for this. Their whole history has been about tax code, tax law, and they're experts at it, very good at what they do. This is something that came out of nowhere and now has become their prime directive. So I just understand how bureaucracies work. It takes a long time for them to make this pivotal shift in their culture. And so far, they've been moving pretty slow. The scammers are moving way ahead of them. They've really got it. And they say it's hundreds of millions. I say this thing is past the billion mark already. The money that's been stolen is we'll never know a real number. So again, just be alert. Just be alert and guard those senior citizens, please. That's the number one thing on my with me on this. Okay, so Todd, I am holding the brand new. This is hot off the presses right here. The brand new 2018 Form 1040. Now the Form 1040 EZ and the Form 1040A all gone. This is already a postcard-sized form. This is the front, this is the back. Now what the IRS said, this originally was supposed to be printed just this part on one page and the other on another page, but they said, to save paper, we're going to go ahead and let you put both on the front page, which is nice of them. The idea was, you remember the promise, every president since I think George Bush the first promised us a simplified tax code that you could do on a postcard, which really we already had a postcard tax return. If you're a not-for-profit charity and you have less than $50,000 of donations in a year, they actually have the Form 990, which is a postcard that you fill out and mail in, or you fill it out online. There's like 4 questions, your information, and you send it off. And that's all they need for a not-for-profit, because they're not reporting any income, they're not reporting any taxes. So they just want to know you're still there and you're still alive and working. The problem with this is we really don't need a postcard-sized tax return anymore. Everything is done electronic. If you're working with a tax preparer, by mandate, by law, that tax preparer is supposed to e-file, electronically file your tax return. If you go to a tax preparer and they're having you sign a tax return to paper file, ask him why. There may be a legitimate reason. You may have a form that is a special form that has to be mailed in. But that's the exception, not the rule. Most tax returns are electronically filed. In fact, it is the law. You have to electronically file it. Again, there are exceptions. There are people who have a religious conviction against doing it. There is a group of people. Fine. There's a form you can fill out and you paper file those. Again, usually there's a problem with the return and it has to be paper filed. Other than that, it is e-filed. And we're talking about hundreds of millions are e-filed without a problem every year. So this is not new technology. Also, if you go into a tax preparer, I'm holding this up if you're watching me live, right here, or if you're looking this later when I post this to my website, you're seeing this right here. The tax preparer will always put their information on here, okay? The paid preparer use only. All kinds of little numbers. We have a PTIN number, telephone number, EIN number, our address, our name, and our signature goes right there. If it's not there, if it's blank, or it says self-prepared, you've got a problem and you're dealing with a not reputable preparer who is violating the law, and it could affect you. There's this, people think that, well, they did it, they're the tax preparer, if there's a mistake, they're the ones liable for it. No, that's not how it works. You are the one liable for it. You signed the tax return, you approved of it, you're supposed to know what's on here. Now, if the tax preparer committed fraud or did something like that, yes, they're liable. I'm liable for my actions. And when people do make mistakes, we make mistakes, we stand behind all our work. I have insurance to cover a mistake I might make, but I stand behind my work. My word is my insurance. And I stand behind it. I do what I got to do to make it right, but I sign off on that tax return. My name is on it. As a matter of fact, my name's on every tax return that leaves our office. Last year, we had 800 tax returns. And that's not, corporates and everything else that we do, all the business advice, consulting, financial planning, on top of all that. So everything that I do, I stand behind. So we don't need a postcard size return anymore. Nobody is going to do this. It's e-file. And it's a postcard size tax return with 6 forms attached to it. And that is the biggest change. This actually created, yes, it created a small Form 1040, but it created 6, count them, 6. I've got them here. brand new schedules that did not exist before. Most people know Schedule A, Schedule B, Schedule C, Schedule D. A is where you put your itemized deductions. B is where you put your brokerage information. D is dividends and interest. C is if you're self-employed business. E if you own real estate or you have K1 information. F is your farm. Many of you here in Rutherford County that have farms, legitimate working farms, you do Schedule F. Now, Todd, we have Schedule 1, Schedule 2, and we're going to keep, in keeping with the theme, Schedule 3, Schedule 4, Schedule 5, and Schedule 6. Brand new schedules that did not exist before. And while they're simple, you really need to know what you're doing with this. This is fundamentally changing the way we prepare a tax return. And another concern that I have talked to tax preparers and I have said, what do you think of the new Form 1040? They said, the what? That's a red flag to me. The new Form 1040. Oh, yeah, I got that email. I saw there was some changes. Well, what do you think of Schedule 1? The what? Schedule 1. It is the most important thing on the new tax return. The way they're doing it, and after we all learn this, it's not going to be that complicated, but there's going to be a learning curve on this. And I'm concerned, we're going to see a lot of mistakes. You put all the income separately, and you put all the expenses separately, and you put all these deductions separately on these schedules, and then they go to the front page. They go to this postcard, Form 1040. And it's going to be confusing to people because they're going to be looking for it the old way. And then when you look at it the new way, the numbers will not add up. And that is the part that's concerning me going forward. Okay, the numbers will not add up. It's just a different way of doing it. It's all going to work. So for those of you that self-prepare, get ready. This is not going to be that simple. For those of you that see a professional, just please take the time and go over everything. Because as I just said, you are the one liable for it. You cannot say to the IRS, my preparer made a mistake. The IRS is going to say, you are supposed to look at it. Okay? Those of you that come to me know I don't trust the software. I don't trust the software at all. I look at the 1040 and those numbers better add up. In my head, I know more or less what it's supposed to be and where it's supposed to be. And if I see any deviation, I want to know why. I don't look at line 6 as I'm looking at this example. Line 6, it says, and this is just an example that we were using to practice, because we've been practicing this. Our software was released Friday, by the way. The 2018 software was released Friday. We are very excited about this, just very excited. So we've been practicing. So line 6 says $50,850. Where did that come from? Why is that $50,850? And the answer is never because the computer said so. Or if they say because it is. Because it is. Well, yeah, well, I can tell it is. Why is it? It is what it is. Yes, it is. But why? Because there's a why. And it's all being fed from a form. So important highlights with this that are going to catch people off guard. We all know standard deduction is doubled. Married, filing joint, your standard deduction last year was $12,000. This year it's $24,000. Single people or married filing separately, $12,000. Head of household, $18,000. It's really, it's great. But the IRS giveth, the IRS taketh. You used to get $4,050 per exemption. Now on the 1040, you don't get exemptions anymore. So now you're losing that exemption. We don't have them anymore. So if you're a typical person, husband, wife, one exemption, one child, one dependent, whatever that dependent may be. I used to say, a child, but it could be anything. that qualifies for an exemption, you're still coming out ahead with the $24,000 and losing that exemption. But what happens if people that have many children? That exemption added up, it was a big number. Well, that's gone. Okay, that's just gone. To make up for it, the child tax credit, I'm going to get to that here in a minute, but that's gone up. And this is where we're going to have this problem with the W-2 withholding, because that taxable amount is going to be higher for some people. The tax rate's lower, but the taxable amount is going to be higher. And that's where we're going to have this discrepancy in the W-2s. Todd, am I explaining this okay? You haven't lost me. See, Todd's my litmus test. If Todd's looking at me like he's engaged and he's listening and he's nodding yes, I'm communicating it. If I get that rabbit in the headlights look from Todd, I need to slow down. Yeah, that look right there. When I get that look from you, Todd, that's the look. Thank you. I need to slow down because I'm not seeing the people. So you are the people. That's why I love Todd being here. That's where we're gonna have the problem. So let me back up to the obvious question people are saying is, well, if I'm not getting an exemption from my child and I don't get earned income tax credit for this child, I won't say child, let's say dependent, for my dependent, and I don't get earned income tax credit for this dependent because, they're over 18, they're over 17, so they don't qualify for that, and I make too much money for earned income tax credit, I phased out of it. I make $100,000 a year. My wife and I, with our investments and everything, we're over $100,000 a year, which nowadays is happening a lot more. I'm not going to get earned income tax credit. Why do I even need to put my child on the tax return, or my dependent on the tax return? The IRS is advising that we do it because it will freeze that Social Security number and tie it down. Let's say that the dependent had no other income, no income at all. They're not going to file a tax return. It'll lock them down for the ID theft. We still have this ID theft thing out there, and it's still going. Now, this is getting into IRS theory, tax law. I don't want to lose everybody on this. I'm just gonna hit on it and move on. Technically, we still do have an exemption of $4,050. Behind the scenes, it's working in these other calculations, but for the average person doing a tax return, it's not, and it's not there. But it is there, but it's not there. I don't know any other way to explain it. I just don't know. It's quantum taxation, okay? It's the quantum physics of taxation. The number's there, but it's not, and we need it. So you're still going to lock down that dependent. You're still going to put them on your tax return. Don't make the mistake of not doing it, because it's already been put out there. Oh, we don't need to do it because you don't need them. Yes, you do need them. You need to put it on there. And to safeguard their social, you're going to put that on there. Now, in the coming weeks, I'm going to get into some things. I really wanted to talk about some last-minute planning strategies. So I'm going to kind of just say this. The next big thing on this 1040, this new tax form, is this thing called Qualified Business Income Deduction. It's the 20% deduction that you're going to get. I already blew past the break, didn't I, Todd?
Oh, yeah.
I've got one break left. I've got one break left.
Yep.
How many? We just have to make this a 2-hour show today, Todd. That's all there is to it. Todd says no, he's got to go home before the snowstorm hits. Okay, let's take our break real quick. When we come back, I'm going to talk about last-minute planning strategies, QBI, and a couple of, I'm going to give you some free tax advice. You believe that? Gilbert Talks Taxes, WCAB.
People come up to me all the time and say, Gilbert, thank you for doing my tax return. I just got my refund. Any idea what I can do with that refund? Oh, yes, I've got an idea. Call NC Tractor and Farm Supply on Railroad Avenue. Get yourself a brand new Massey Ferguson. You can call Phil at 828-429-5008. And when you're talking to Phil, mention you heard it on Gilbert Talks Taxes. You know what he'll do for you? Absolutely nothing. But me, he's going to give me a discount when I buy my Massey Ferguson. This is Gilbert. I want to tell you about Jesse James Railroad Express at 531 Railroad Avenue in Rutherfordton. It's a great place. Jesse's a good friend of mine, and I encourage you to stop by and support him. On Mondays, he's doing a 99-cent hot dog, mustard, chili, and onions. When you go, tell him Mr. Fabulous himself sent you.
Welcome back, Mr. Fabulous himself. That's what Jesse calls me. He's funny. Go support Jesse. He's doing a great job over there. Mr. Fabulous himself. I'm going to have to go get a coffee and donut after this. I'm going to need it after this. So we've got this thing called qualified business income deductions. Okay, qualified business income deductions. Up to 20% of the taxable business income, you get a deduction. Okay, from your taxable income to the point that it will pay your tax. So to get rid of the tax. So. There's a lot here. I mean, there is literally a lot here. It's the first year that you're going to need to do year-end tax planning for your possible 20% section. It's Section 199A tax deduction. If your taxable income is above $175,500 for single, $315,000 for joint, this is very important information. Now, I want to tell you this. You really need to sit down with your tax preparer / tax planner before the end of the year. If you are a person that you are self-employed or you have business income, you're a member in an LLC and you get a K-1, you're a partner in a partnership, you get a K-1, you are in real estate and you file Schedule E, you're a farmer, you file Schedule F. If you're any of those people, please contact your tax preparer, your tax planner before the end of the year, and at least ask them, are you even looking into this for me? Ask them, do you even know what's going on with this? Does it affect me? Okay? If the answer is no, I don't know, what you're talking about, find a tax preparer that does. Find a planner that does. Because this is huge. This is absolutely huge. Those of you that I work with, I have a list of people I've already been calling, reaching out to. I will be reaching out to this week. We just were in the class last Monday, and going over this and getting a hold of some of these strategies. So in the next few weeks, we're going to be talking. A lot of you have already called me, and we're engaged. And if you don't have somebody that's doing this for you, get one. If you've been doing your own taxes all these years, great, good for you. I advocate for that. I think it's great that people know enough about what's going on with their business, they can do their own tax return. But this may be the year that you go ahead and spend a couple of $100s and talk to a professional. Really, it's that big a deal. Okay, so that promotion said, where you would get this big deduction, which could be as much as 20% of that income, you're going to get zero if you don't do this right. Okay, so I'm just going to hit this. I can get into it, but I don't know enough about your own personal situation to really give you some solid advice. I'd have to have more of a one-on-one dialogue with you. We can harvest capital. This is just some of the first things you need to be thinking about. So if your deduction amount is less than 20% of your QBI, so somebody goes through it, you're getting less than 20% deduction, you can use some strategies to go ahead and increase that 199A deduction. You can harvest capital losses. Those are capital gains. See, because capital gains add to your taxable income, and taxable income is the income that, there's three things here, determines your eligibility for the Section 199 tax deduction. It sets the upper limit, that's the ceiling, because you can actually phase out of this. If you have too much income, you won't get it. If you don't have enough, you'll get too little. So you're trying to hit a bullseye with this thing. There's a target, a zone you're trying to get in. It sets the upper limit. It establishes the thresholds above which you need wages and or property to obtain your maximum deductions. I mean, this stuff's so complicated, I've got it all written down. Those of you that know, I just usually say this stuff off the top of my head. This is so new. These phrases aren't even in my vocabulary yet. If capital gains are hurting your Section 199A deduction, then you have some time before the end of the year to harvest some capital losses. Let's say you have too much capital gains. There are some losses. Losses are, as an example, you've got some assets that selling them would generate a loss. And you get rid of them. Why not? Well, now would be the time to do it because those losses are offset gains. Some people are getting rid of these for a future date. A good tax planner will do that. Well, now is that future date, folks. Okay, and I can give you some examples there. I'll be talking about this over the next couple of weeks, and then we're getting right into it. So you'll actually be seeing real life examples. Now, Section 198 deductions uses taxable income for the threshold. If you have itemized deductions to reduce or eliminate that threshold problems, that'll increase your deduction. Charitable contribution deductions are the easiest way to increase your itemized deductions before the end of the year. Charitable contributions. They're not always in the form of money. They can be in the form of property. Let's think about this. Is this a possibility? You can donate appreciated stock to a charity. This is a 2018 last minute. I've actually got a whole strategy about doing that for your stock portfolio. But you can donate appreciated stock, or you can prepay. Yes, you can do this. You can prepay planned 2019 charitable contributions. You can actually prepay for 12 months. So that takes you right into 2019. So if you need a really large charitable contribution deduction to make this work, you can even do something like a conservation easement. I actually have a client in Tryon, hunting country area, donated a conservation easement, and he created a pretty large deduction. So this is a strategy if it's possible for you. Retirement contributions, there's a whole strategy, especially if you're a business owner, a whole strategy here. Retirement contributions you make directly reduce your taxable income, and you still have the money inside the retirement account. So you're making the money, reducing your taxable income, but you still have that money. It's in your retirement account. It's earning you interest. So you're not giving that money away. You're not just buying an asset. If you're a sole proprietor, your retirement contribution does not reduce your QBI. Therefore, as long as your QBI is the basis for your Section 199A deduction, you can put away as much as you want into a traditional IRA, simple IRA, SEP IRA, individual 401, and you won't hurt your Section 199A deduction. This is huge, or huge, as we like to say. This is huge to do this. Okay, and then buying business assets. That hasn't changed, okay? We've also can explore the 100% bonus depreciation and Section 179 expensing. Those of you self-employed businessmen know all about this. Well, now there's some better things here. I also do segmented depreciation for assets like buildings, which can increase that bonus depreciation. Talk to me about that. Those of you that have building assets or putting buildings into your asset, or put into assets into depreciation this year, talk to me about that. But buying business assets is always one of the way. Now I've got a lot on this. Give me a call. I've got a mail out, a handout that I'm giving, talking about selling your car, buy and sell strategies, and vehicle trust. These are business assets, okay? Business assets. In Section 179, the new tax law kills like-kind exchanges, 1031s. So we have to adopt a whole new strategy for this. I've got 1 minute left. Is that about right? 1 minute left. So a buy-sell strategy. And when I say sell your car, I'm talking about a business asset, okay? Because with Section 179, especially if we can sell this asset at a loss, we get back to that capital loss. If you've got a car, here's typically what happens with a business asset. Self-employed people, they have cars, they have that old car that they don't want to get rid of because it still runs and you never know when you'll need it. You'll never know when the new car might be in the shop. So we keep it and we let Junior drive it, or we let whoever drive it. Maybe let an employee drive it. But really, you don't want it. You want to get rid of it. Now may be the time to get rid of that car. So, we talk about that. If it's just sitting there, or you've got equipment that's just sitting there parked, creating nothing but rust stains on your driveway, now may be the time. There's also, in the last 30 seconds here, this is a little bit more complicated strategy, but please give me a call. We can talk about this. IRS safe harbors. You can prepay expenses. Cash basis accounting, which is where I put all my people. If you're doing accrual, you might want to look at that. But cash basis accounting people, safe harbor prepaying, especially rents and leases. If you prepay your lease for, let's say you pay $300 a month for something, you prepay that $3,600, that could be all the difference with you getting a bigger deduction and a bigger QBI deduction. Using your credit cards to pay for business assets before the end of the year. Remember, you can expense it when you buy it and put it in service before the end of the year, not when you pay the bill. So if you use a credit card, especially, they give you 6 months, same as cash or whatever, you don't have to pay for a year, 0%, whatever, something like that, you can offset that. I'd never advocate paying interest, okay, using a credit card, because interest will kill you. But let's say you could, strategy, no interest penalty, you can get that deduction before December 31st, we can do that. Now, the last thing, so that's really it, and I hope I didn't lose everybody. Give me a call. My telephone number is 828-289-9300. Last thing, people are asking me, Trump, I want everybody to rest assured, our president's approval rating here at Gilbert Talks Taxes stands at 100%. Okay? He's doing a great job. We need to support him. We need to stand behind him and let this thing, don't get caught up with all the white noise about everything that's going on. We're moving forward. The economy's up. The economy's down. The economy's up. Yes, it's been that way from day one. Okay? Everybody, thank you so much for listening. I will be here next Saturday, 8 o'clock, on Gilbert Talks Taxes, WCAB.
Of President Emmanuel Macron.
It is the fourth weekend demonstration.